Oh, hi everybody, and warm welcome. And just before we get started, just have to give you the usual risk warning for all markets. Um, Trading is a risky business, so please do not use money that you cannot afford to lose. There we go. That's the risk disclaimer out of the way. Just move the chat box out of the way. I'm on the gold workspace today. And unfortunately, it's not a good day for another bad day for gold bugs. It was pretty bad yesterday, and things have got even worse today. Just want to pull this up full size. There we are. We're on the daily time frame, and just a classic price waterfall developing, breaking away from the volume point of control. And just want to highlight a couple of things on the chart. First of all, the volume point of control is this yellow line here, the yellow dashed line, which is really the fulcrum of the market. And what it denotes is the heaviest concentration of volume, which you can see over here. And that is the point at which you can say that price is in agreement, if you will. The bullish sentiment and the bearish sentiment, there is no strong divergence one way or the other, and hence we get the congestion around the volume point of control, and hence we get the deepest amount of volume that is built. Now, what's important is once you start to break away from that, you then have the opportunity to jump into trades, and this is a classic example of the of gold as it breaks lower. Some really straightforward trading opportunities. These are big moves. Remember, we're talking nearly $100 an ounce, and another big move today here, $30–40 an ounce here. These are massive moves. There was no buying came in yesterday. You can see it here. No wicks top and bottom, just a straight down candle on the day, confirmed with a ton of volume. This is going south fast, and it's been confirmed again today. It's confirmed on the trend monitor. But really what I wanted to show you, if you're a breakaway trader, and breakaway trading is a great way to trade, and what the vpoc does for you, it really sets you up for that opportunity. It highlights not only the fulcrum of the market, but you also get these levels building around, which I've highlighted in other videos as well. And we have this platform of support, not a strong platform of support granted, but nevertheless it was there. And it gives you a trigger, if you like. That can be your trigger into the trade. It's an opportunity, depending on how far away from that you want to jump in. But the other aspect to this is also once you're into that trade, then what you're also looking at in terms of the vpoc itself, and in particular the histogram, as the price approaches these areas. Because what you expect to see when you have a low volume area like this is you expect to see the price move through there pretty rapidly, which it does. It did yesterday. It sliced through there. And this is a facet that a lot of traders don't appreciate on the volume point of control itself, the actual histogram that describes the volume on the chart, where you have these high volume areas and where you have low volume areas. Now, if you're in a trade and the price is approaching one of these low volume areas, you can be pretty assured, and it doesn't matter what time frame. This is a daily time frame, but it could be a 1 minute time frame, an hourly time frame, whatever. It makes no difference. The principle is the same. Once the price action approaches a low volume area, you can be pretty assured that it's going to move through there fairly rapidly. Why? Because there's no volume there to act as a support platform. And the principles are identical to those we know so well in terms of price. We know that price levels act as support and resistance. Well, volume acts in exactly the same way. And when you've got the volume histogram, this is what it'll do for you. It will define these areas so that as price approaches these areas, we've got even lower volume down here. The price is moving through here very rapidly because there's nothing in the way of volume to give it any support, nor indeed is there anything in terms of price to give it support. And if you've got the two indicators on the same chart, this is the accumulation distribution indicator and the vpoc indicator, then you've got the two facets of support and resistance. You've got price-based support and resistance, and you've got volume-based support and resistance. So really short video, just wanted to show you that. This is gold breaking down. It's looking perilously weak right now. You know, there's no support from a volume perspective, certainly in terms of the daily. There's nothing in terms of a price support on the daily either. And all of that is in this classic, you know, we've got very strongly rising volume here, and we've got a market that's rolling over into a what we call a price waterfall lower. Terrific trading. And if you're like me, then I love trading short, because that is when the market really does move with some momentum. Yes, it moves to the upside with momentum, of course, but generally what you see is markets will fall much more rapidly than ever they rise, and there's a rationale for that, but I won't go into that now. So if you're like me, you know, trading short, I'll be quite honest, I'm a gold bug at heart. I like to see gold rising, but at the moment it's really under pressure, seriously bearish, and even more so, we've now broken away from the volume point of control, which was at 1844, 1845, and we're now moving down towards $1,700 an ounce and probably lower than that. Finally, you can see all of this bearish sentiment that's been going on for gold for a long time now, really confirmed with the trend monitor at the bottom there and saying steadfastly red into the bargain. So really giving you another indication of the fact that this is just a very bearish move, and the volume's building here today as well. And of course, all of this is not helped, certainly in terms of commodities. We've seen some big moves on oil today as well. That, of course, is also not helped by, we've got you know, a dollar which is very strongly bullish right now. So that is obviously helping to drive commodities lower, because it works inversely in terms of the relationship with commodities. So there we go. Thanks for watching that one. Hope you've enjoyed it. See you again soon, and bye for now.